Hello everyone, good evening to all. Just confirm me once in the chat box, sir. My voice is audible. Okay, sir. Thank you for your response in the chat box. Let's start our discussion. So, in our last session, we have covered the specific points regarding the valuation. 1 plus 5 is equal to 6, that is value fixed. And sir, if the buyer and supplier are not the related party and price is a sole consideration, in that case your transaction value will be treated as your taxable value, and if there will be any incidental expenditure, the same will become part of your value of supply. And also, if any expenditure which is the liability or responsibility of supplier but the payment has been made by recipient, then also the same will be included in the calculation of value. Then after, we have also done the various valuation rules that, sir, suppose there is a specific situation in which the buyer and supplier are the related party and price is not the sole consideration, then rule number 27 will be applicable if the price is not sole consideration. Rule number 28 applicable if buyer and supplier are the related party. Rule number 29 applicable in case of principal and agent, and if you are not able to decide the value according to 27, 28, 29, in that case we have rule number 30, that is master key cost plus 10%. You can say 10% of the cost will be your value of supply. Okay, these situations when we have to check, when we'll get the financial statement and we found any specific situation in between the principal and agent, distinct person, and certain journal entries in the books of accounts, then we have to raise the concern regarding the value of supply. And also, we have done certain special cases valuation in case of air travel agent, 5% domestic, 10% international. And also in case of insurance agent, sir, insurance agent, if the investment amount, you know the investment amount, in that case your premium minus investment, the remaining portion will be treated as your value of supply. If you don't know the investment figure, in that case you can directly take the 10% of your premium, and if there will be a multiple premiums, in that case for first premium 25%, for remaining 12.5%. And also we have done the value of supply in case of second hand goods, margin money positive, yes, GST applicable on margin money. Margin money negative, no GST applicable. We have also done the concept of pure agent under GST, that will not become the part of your value of supply. All these things we have done. Sir, all the things are okay for you? Next concept which we are going to start, that is discount. Okay, many times when we are analyzing the financial statement or profit or loss account of our client, at that time we found certain discount income, discount expenditure, or certain clients are showing the discount in the financial statement net off. Okay, so the question is that whether GST will be applicable in case of discount or not. That means, suppose I have made a supply of my professional service, GST consultancy for 1 lakh rupees. Okay, then after I have given a discount of 10,000 rupees, so 10,000 discount, so my client is going to make the payment to me, that is 90,000 only. So my client is going to make the payment of 90,000 only. Okay, now in the industry there are two types of discounts are available, and sir, this discount is very debatable concept. Okay, we'll also discuss the concept of credit note and ITC and the output as well when we'll discuss the next topic, that is input tax credit. So first you just need to know the basic concept of discount, type of discount under GST. Okay, so there are total two types of discounts are there, we can classify, and that classification plays a very important role because the complete applicability of GST is depend on your discount. Okay, now first scenario, suppose when I am providing my services, or when I am supplying any goods. Okay, suppose I am supplying this pen. Okay, the price is 1 lakh rupees. At that time I have given a 10% discount. Okay, so 90,000. So first situation, discount made at the time of supply, or discount known at the time of supply. Second type of discount, suppose I have given the target to a franchisee who is selling my courses, okay, and I have given that target to the franchisee that if you will sell in this particular month for 5 lakh rupees of these courses, in that case I will give you a 10% discount, but there is requirement that that person has to make a sales of 5 lakh rupees. So the discount related terms has already been decided at the time of supply. So the second type of discount, terms decided. Discount amount, no idea, but the terms is already clear. So terms decided at the time of supply. So total two situation: one, when discount has already been known at the time of supply, and second, when the terms has already been decided. Now third situation, no idea about the terms and no idea about the discount. That means discount has been given after making the particular supply, okay. So government has given two types of treatment. When you are making the supply and providing the discount and you know the figures at the time of supply, or you know the terms at the time of supply, in such a scenario that discount will be called as your trade discount. And when you don't know about the terms and the quantum of the discount, in that case that type of discount will be called as financial discount. Now you may say, sir, what is the purpose of these two type of discount? Why there is a classification of trade discount and financial discount? Sir, the trade discount, when you are giving, that discount will be given with effect of GST. And in case of financial discount, no GST effect will be given. No GST effect. Sir, nahi samajh aaya? Can you please take one example? Yes, definitely. So, first scenario, suppose first scenario, Messrs Hari Enterprises. Messrs Hari Enterprises has made one sale of one computer. Okay. The price of the computer is 1 lakh rupees, and instantly Mr. Hari has provided a discount of 5%. Okay. On account of the payment immediately. Okay. So 5% discount. 5,000 rupees. So net price will be 95,000. So that will be treated as taxable value and GST will be applicable on that 90,000 rupees. That means if there will be a discount at the time of supply itself, then the same has automatically be reduced in the invoice. Okay. Second situation, suppose Messrs Batra Polymers. Messrs Batra Polymers have certain franchises across India, okay, and they have made a supply to a particular person, suppose 5 lakh rupees, okay, and Messrs Batra Polymers has given a promise to that particular person, to the buyer, that if you will make the payment within 3 months, in that case I will give you a discount of 5%. So the terms has already been decided at the time of supply, that if Mr. Buyer is going to make the payment within 3 months, in that case that person will get a discount of 5%, otherwise complete 5 lakh is to be paid. Okay, so terms has already been decided. So once Batra Polymers is going to raise the invoice for 5 lakh rupees, okay, and pay GST on that 5 lakh rupees, suppose after 2 months Mr. Buyer has made the payment, in that case the Batra Polymers is going to provide a discount of 5,000 rupees. So Batra Polymers is going to issue the credit note for, suppose they have given a 10% terms, 10% discount or 5% discount. Okay, so 25,000 rupees, you can say. So in this scenario, one credit note has been issued, that is 25,000, and GST effect will be given. Okay, so the output value can be reduced or output tax can be reduced by the supplier, and the buyer has also need to reverse the input tax credit. by issuing the debit note. Okay. Sir, terms, no need to mention on invoice, but there should be one formal communication regarding the terms. Otherwise, there may be chances whenever the person is going to give the discount, that person will treat it as a trade discount because the terms has already been decided. So government at the time of audit demands certain legal documentation regarding the terms which you have decided. That should be through the mail communication, that should be through the written communication over letterhead. So these type of things are required. First thing, Batra polymers. Okay. Second example. Now this concept is okay when the terms has already been decided and the quantum of discount has already been provided. Yes, cash discount, if it is given at the time of supply, in that case, yes, definitely the same will become part of your credit note. Sir, Gagan sir, if at the time of supply, you know the discount, in that case, you can reduce it from the invoice. But in our last example, we have mentioned a specific condition, that is if Mr. Buyer is going to make the payment within 2 months. So that person will be eligible for discount if the person is going to make the payment within 2 months. So we have to wait it. We cannot adjust it in the invoice itself. Okay. I think now this concept is okay for Gagan sir and for all as well. Next example. Next example, suppose Messrs XYZ Enterprises has made a supply rupees 1 lakh. Okay. At the time of making the supply, Mr. XYZ Enterprises has charged GST on 1 lakh rupees. Okay. After making the supply, after 10 days, recipient is saying that we found your goods as a defective, so I will pay you the amount, but I will deduct certain portion. Okay. In that case, Mr. Buyer is saying that I will only pay you 95,000 rupees. So in that case, XYZ has to issue a credit note for 5,000 rupees. But sir, the terms related to discount has not been decided at the time of supply. Terms has not been decided. So when the terms has not been decided at the time of supply, in this situation, when in future the credit note is to be issued, that credit note will not be issued with GST effect. That means XYZ Enterprises is just going to issue the financial credit note. In that case, just the value is going to be reduced. The GST amount is not going to be reduced. Okay. And the buyer is not required to reverse any input tax credit, because supplier is also not going to avail any benefits of reduction regarding the output calculation. That is the point which we need to keep in our mind. So this is the concept of my financial discount. I think this concept is okay for everyone. Yes, sir. Gagan sir, your final supply will be for 90,000. 5,000 will be treated as your discount. You have to pass the journal entries. Sir, in that case, you may, if GST department is asking for the GST in case of financial, in that case, you have to provide the details that, sir, the terms related to discount has not been decided at the time of supply. And most important, the supplier has also not reduced the outward liability. Then how that discount or the credit note will be treated as trade? Sir, this type of discount, why they are saying, okay, it's logical, because section number 31, invoicing done, at that time they are saying that if you are going to issue any discount, in that case, if you are providing the discount at the time of supply, or you are deciding the terms at the time of supply, in that case the particular part will treated as a part of your supply, hence discount is allowed for the GST. But if you are providing the discount after the supply, in that case that particular discount will not become part of that particular supply, hence the same will be treated as your financial discount, not related to trade. That is what is the logic. Sir, medical shop will discuss the complete example. Okay, just give me some time. Okay, we have a concept in our book as well regarding the medical shop. We have also included the example in case of pharmacy. Sir, in case of financial credit and debit note, when the supplier is not going to reduce the output tax, in that case, buyer is eligible to claim the 100% input tax credit. Suppose the supply has been made for 1 lakh rupees, then after 5,000 discount is there through the financial credit note. In that case, your buyer is eligible for input tax credit on the whole 1 lakh rupees. 5,000 ke liye GST journal entry is going to be passed. Sir, if already decided, Gurmeet sir, if already decided at the time of supply, as per the policy, as per the written agreement, if the goods found to be defected, in such a scenario, there may be a provision of discount of 3%. So terms has already been decided, so that will be treated as my trade discount. So the must condition is that your terms has already been decided. Yes, you can say it. Sir, if it is a sales return, if it is a sales return, in that case, yes, but obvious the output is going to be reduced and input tax credit is also going to reduce. Okay, sales return is a completely another concept, because in case of sales return there is a involvement of supply related things, and we are just taking the example related to discount. So both the things are completely separate. Yes, sir, definitely. Sir, your financial discount is going to reduce your turnover, definitely, but it will not affect your GST. Hence, this is a financial. If you have charged any excess amount in your invoice and then after you are issuing any discount, that will be called as the margin money concept or rate difference, you can say. In case of rate difference, if you know at the time of supply itself, in that case that rate difference will be on account of your trade, but rate difference after supply, it will also become your financial transaction, because at the time of supply government has also, double AR authority has also given a very specific decision in this particular matter. As in case of your overcharged rate difference, so when you are buying the goods, at that time you are checking the rate itself. So how you can accept the goods which is above the market price? That means you know very well. So in that case, if you are issuing any debit or credit note, that will be treated as your financial. Sir, in case of defective goods and you are going to return that particular goods, in that case, yes, definitely credit note will be issued with GST, definitely, because that will become part of your supply. Yes, sir, financial discount, because the same is given in 9C as well. We have to fill that discount. Okay, in the part of GSTR 9C as well, when we are reconciling the turnover with our audited financial statement and the GSTR 9. Okay, if you will check part second of your GSTR 9C, in that case, you may found the complete reconciliation. Okay, discount which is not adjusted with GST, that type of column is given in GSTR 9C itself for showing the adjustments. So this discount concept is okay for everyone. Total 3 pillars are there. One in which the term related to discount decided, or the discount quantum is decided, that will be treated as my trade discount. And if there is a discount, the terms has not been decided, so the same will be treated as financial discount. Everyone, now next concept, which is also very relevant and very important. Next example, sir, I want to buy one air conditioner. Okay, I want to buy one AC. Okay, so I have visited Messrs. Abhishek Enterprises. Sir, my voice is not clear. Anyone can please confirm? My voice is audible? Audible. Okay. So Ravi sir, I request please check at your end. There may be certain technical issue at your end, so please check it once. Okay. So I want to buy one AC. So I have visited Messrs. Abhishek Enterprises. Okay. Now the matter is that I want to buy that AC on EMI. I want to buy that AC on EMI. Okay. So Abhishek Enterprises is saying that, sir, will arrange the EMI facility for you. Will arrange EMI facility for you. Suppose the AC price is 1 lakh rupees and GST at the rate of 18%. Okay. And Abhishek Enterprises is saying that, sir, will arrange EMI facilities for you. Okay. So monthly 5,000 rupees installment is here. Okay. Now, after 2 months, I have defaulted in payment of one installment. Okay. I have defaulted in payment of one installment to Messrs. Abhishek Enterprises, and Abhishek Enterprises has charged interest on me at the rate of 18%, you can say. And they have charged 1,000 rupee interest for the delay. My question is that whether GST will be applicable on this 1,000 rupees or not. Just take the next example. Okay. Same, I want to buy AC. I have visited Abhishek Enterprises. Okay. And I want to buy the AC on EMI. At Abhishek Enterprises, I found one person, that is the dealer or the agent of Bajaj Finance. Okay. So that person connected with me and said that, Mr. Sachin, if you want to buy the AC on EMI, in that case, I will provide you the loan through the Bajaj Finance. Okay. So that person has provided the facility to me for that 1 lakh rupees in installment for Bajaj. Okay. Now I bought that AC from Abhishek Enterprises, and Bajaj Finance has paid the amount to Abhishek Enterprises immediately, and I have taken the loan from Bajaj Finance. Okay. The same has been booked in my name. In that case, after 2 months, I have defaulted in payment of one installment, and Bajaj Finance has charged 1,000 rupees interest. Whether GST will be applicable on that 1,000 rupee interest? Certain participants are saying yes, certain participants are saying no. And I request each one of you, try to provide your response in the chat box, because if you are joining the live session, in that case, you should interact in the chat box. Okay. Otherwise, recorded videos are available on YouTube. Okay. So we just need to enjoy the live learning. because we all are family members. So अगर आप गलत आंसर भी दोगे, no effect is there. Okay. So sir, just check both the scenarios. Just check both the scenarios. Many participants are saying that yes, GST is applicable. Sir, try to understand why GST is applicable. Why GST is applicable? Here, I bought the goods, or I bought the AC from Abhishek Enterprises at 1 lakh rupees. Okay. And I have taken the loan facility from Bajaj. So Bajaj has just given me the rupee money. Bajaj has not given me the AC. I have not bought the AC from Bajaj. I have bought the AC from Abhishek Enterprises only. Bajaj Finance has just given me the facility of fund, that is money. And this is the pure transaction of money only. And money is not goods, not services. Okay. Because government has specifically mentioned in section number 2 that your money is not included in the definition of goods and services. And when a particular thing is not a goods or services, then how we can impose GST on that? And this interest is due to that transaction only, that is the money related transaction only, hence no GST applicability. But in our first example, where the finance has been arranged by Abhishek Enterprises itself. So in that case, Abhishek Enterprises has given me the loan, and that loan is due to trade. That means for selling the goods. So that is trade for Abhishek Enterprises. So in that case, when I am going to make a default and Abhishek Enterprises is going to charge interest, that interest will be treated as your trade interest, and yes, GST will be applicable. If you will check the page number 130 of our book, GST on penal interest on EMI, situation related to penal interest, EMI grant by seller, penal interest shall be included in the value of supply. Situation related to penal interest, loan directly taken by buyer from finance company, here supplier is not in picture, and here penal interest is mere interest on loan, so monetary in nature, hence not included in value. Yes, sir. Regarding Bajaj, no GST. Regarding Abhishek Enterprises, GST. Sir, this PPT or PDF is the part of my book. Okay. Many participants has already placed the order, and the books has already been received on their postal address. So if anyone wants, then you may buy the books. Okay. Yes, sir. Processing charges are subject to GST. When we are taking the loan, in that case also, the processing charges are applicable for GST. Why? Because processing charges bank is taking not for the money. Bank is taking that processing charges for their services. For book, you may WhatsApp on this number. Sir, overdue interest on credit and credit card payment, this is also a financial transaction. Okay. So no GST, because bank has provided the facility of the finance through the credit card. Now you have bought something, you have used that particular credit card for your shopping, for your personal purposes. That is completely a different aspect, but bank has provided you a fund. So it will be treated as financial. Sir, I am not talking from the perspective of penalty. This is a penal interest. Yes, sir. In our last session, we have also done, when we have done the concept of um time of supply, at that time we have done a very specific concept in that in case of any addition in future, and if that addition is a part of supply, the same will become part of supply, and the same, when the same will become part of supply, the same will be treated as your consideration. As I have already communicated that, sir, our now onwards each and every topic is linked with each and other. Okay. And I request each one of you, the book is very important. So after completion of the session, just once go through with the book as well. It will create your concept very strongly. Okay. Just spare 10 to 15 minutes, because I am taking the complete practical scenario in the session itself. Now this is completely depend on you. You just need to go through with the book so that it will be very much clear. And if you have any query, in that case, yes, you can ask on the next day. And I request, as we have a limited amount of time, that is 1 hour per day or 55 minutes per day, so I request, while go through with the book, if you found any issue, you just need to capture the picture and you just need to put it in our WhatsApp group. Okay. We'll try to simplify it in the WhatsApp group itself. Otherwise, we'll take it in our class. Okay. So that we can maximum utilize the time. Because the purpose of that WhatsApp group is not just only to share the live session joining link, is to discuss something fundamental and something practical things. So if you have any query, any concern, you can raise it in the chat box on WhatsApp. Now, next concept. Next concept, which is also very much interesting in case of determination of value. So in case of credit card, just check the interest has been charged on which thing. Okay. Or the GST has been charged on which thing. Okay. They will charge GST on your service charges. They will charge GST on any penalty which has been imposed. So just check it. Okay. Or if it is possible, then just hide the name and share the statement in the group. We'll share the things. Okay. Otherwise, we'll share the credit card statements as well regarding the applicability of interest and the relevant things. Next concept. Because you will merely find the GST amount in that particular statement. You just need to check the GST has been charged on which element. Now, sir, many time when we want to visit outside India, okay, when we want to visit outside India, at that time we require the foreign currency. Okay, we require the foreign currency. For arranging the foreign currency, we have to take support of any forex center or the forex division of bank. Okay, multiple banks are there. They are also going to provide the facility regarding the conversion, and many forex points are there. They are also providing the facility regarding the conversion of the currency. So suppose, just for an example, that, sir, I want to visit, or I am visiting Dubai, so I require dirham. Okay. So I have the Indian currency INR and I am visiting Dubai. So at that particular point of time, only dirham will be workable. So I am just going to visit bank forex department for converting the INR into the foreign currency, that is dirham. Okay. And I have provided 2 lakh rupee to the bank, and bank has given me dirham. Okay. Suppose bank has given me 10,000 dirham. Okay. So whether bank is going to charge GST on complete 2 lakh rupees? No, because I have given that 2 lakh and bank has provided 10,000 dirham to me. Okay. So in that case, bank is just going to charge GST on the service charges on the service portion. Now question is that how we can calculate the service portion. There are total two mechanisms are available to calculate the service portion. One is normal mechanism, another is optional option. Okay, one is normal mechanism and another is optional option. Just in the given example, we'll just try to understand this situation. Okay. Sir, suppose I have Indian currency, I want to convert it into dirham. So at that time, RBI is going to release a reference rate for each and every currency. Okay, that this is the reference rate for this currency in India. Okay, so in this given example, we are just going to replace the dirham with your. We are just going to replace the dirham and we'll use the USD. So I require the US dollar. Okay, and for the US dollar, RBI is also going to release the reference rate. So the USD rate, US dollar rate is 75 rupees and RBI reference rate is 72 rupees. Both available, that is USD rate and the RBI reference rate. In that case, suppose I want to convert 75,000 rupees into USD. So I will get how much USD? That is 1000 USD I will get. 75,000 rupee I have and USD is 75 rupees. In that case, I will get 1000 US dollar. Now, how I can calculate the service charges? So the same will be calculated based on the difference between your US dollar rate and RBI reference rate. Okay, so US dollar rate is 75 and reference rate of RBI is 72. So we just need to do one thing, 75 minus 72 multiplied by number of units I am going to convert. So 3000 will be the value of supply. And the bank, the forex department has to make the payment of GST on that 3000 rupees. Bank has to make the payment of GST on that 3000 rupees. This is the first thing. Suppose RBI reference rate is not available. Sir, if you are taking care of any work related to forex department or any forex agent or broker, in that case, these things are very relevant, very useful for us. So we just need to keep our eyes on this example as well. Suppose the RBI reference rate is not available because multiple currencies are also there for which the RBI reference rate is not available. So in that case, government has given the rule that whatever amount which you are converting, that amount multiplied by 1%, that is a 1% of the amount which you are converting into foreign currency, that will be treated as your value of supply. So 750 rupees will be treated as your value of supply. Okay. Third situation, there may be chances and possibility that, sir, I have no Indian currency. I have no Indian currency. So I have US dollar and I want to convert that US dollar into euro. I have US dollar and I want to convert that US dollar into euro. I have no Indian currency. In that case, what I need to do? I just need to do one thing. 1% of US dollar after converting into Indian currency and 1% of the US dollar into Indian currency. So whichever is less, that will be treated as my value of supply. Uska main 1% le lunga. That means, sir, I have US dollar. So I have to convert that US dollar into Indian currency. I have to convert that US dollar into Indian currency, and I also need to calculate that in this Indian currency how much euro I can buy, and 1% of both I have to calculate, and whichever is less, that will be treated as your value of supply, and bank has to pay GST accordingly. Okay, so first scenario in which the RBI reference rate is available, so US dollar rate minus RBI reference rate multiplied by number of units converted, so your value will be there. Suppose the RBI reference rate is not available. In such a scenario, you just need to do one thing, 1% of the amount which you are going to exchange, that will be treated as your value of supply in case of bank. Third situation, Suppose that person has no Indian currency, that person has the US dollar, and that person wants to convert into euro. In that case, you have to convert both the currencies into Indian currency, and 1% of both you have to calculate, and whichever is lower, that will be treated as your value of supply. Sir, RBI reference rate 72. Market price is also there when you will visit the forex department. That person is also going to show you the particular price. Okay, that will always higher than the RBI reference price. Okay, so you just need to calculate the difference multiplied by number of units which you are converted. So that will be treated as value of supply because bank has the earning of that difference only. Gurmeet sir, is that okay? Yes, whichever is lower, that will be treated as your value of supply. This is the first option. Okay, now this option is quite confusing. You can say you have to check the RBI reference rate, you have to check the notifications. Bank has to regularly maintain the data related to the notification, the circulars, the updations which has been issued by RBI time to time. So government has given an optional scheme as well, that is called as composition scheme. Or government ने बोला you should not focus on any type of conversion, you should not focus on any type of conversion, you just need to do one thing. We'll give you a percentage, that percentage you have to keep in your mind, and accordingly the value of supply you have to decide. Just for example, just take it, this is the optional scheme, and this scheme should be selected at the beginning of the financial year, and you cannot withdraw that scheme during the financial year. Okay, now the value of supply will be calculated. Just read it. 1% of the gross amount of currency exchange for amount up to 1 lakh rupees, subject to a minimum amount of 250 rupees. That means if someone wants to convert 1 lakh rupees into any foreign currency, in that case only do one thing. 1% of the currency exchange, suppose you want to convert 80,000 rupees, in that case your 800 rupees will be treated as value of supply. So 1% of the gross amount which you are going to exchange, that will be treated as your value of supply. Now suppose someone is coming that I want to convert 10,000 rupees into foreign currency, and that person is opted that scheme. In that case only 100 rupee will be value of supply? No, government has put a minimum cap, that is 250 rupees. So 250 or 1% of gross currency exchange, whichever is higher, that will be treated as your value of supply. Next, suppose that person wants to convert rupees which is exceeding 1 lakh rupees up to 10 lakh rupees. In that case percentage is going to change. 1000 rupee plus half percent of the gross amount change. That means you have to pay 1000 plus half percent of the gross amount exchange. Suppose you are exchanging 5000 rupees. In that case half percent of 5 lakh plus 1000, that will be your value of supply. Okay, next, suppose that person wants to exchange currency amount which is in exceeding 10 lakh rupees, 15 lakh, 16 lakh, 20 lakh. Okay, in that case the value of supply will be 5500 plus 1/10% of the gross currency exchange, maximum up to 60,000 rupees. That means the value of supply will not be more than 60,000 rupees. First point, up to 1 lakh rupees. In that case, minimum 251% of the gross currency exchange. If the amount is more than 1 lakh up to 10 lakh rupees, in that case 1000 plus 1/2 percentage of the gross currency exchange. Third situation, if the amount is more than 10 lakh rupees, in that case 5500 plus 1/10 of the percentage of the gross currency exchange, that will be treated as value of supply. This is the optional scheme. That scheme has to be opted in the beginning of the financial year, and the same cannot be changed during the financial year. So whenever you are handling any client who is dealing in the foreign currency or the forex department of the bank, at that time we have to keep in our mind this specific concept. And sir, we also need to provide the consultancy to our client that sir, whether you should opt for this optional scheme or you should calculate as per RBI reference matter. How we are going to provide this consultancy? That will be provided based on the transactions, based on the quantum of transaction, based on the scale of that particular forex broker. Suppose the level is very small, in that case we should suggest him that you should go for optional scheme. So no requirement of reading of multiple circular and these things. But if multiple things are there, in that case, yes, definitely you have to focus. Sir, banking company, financial, for everyone, it's okay. Sir, it will applicable on whole gross amount exchange. Okay, as soon as your quantum is going to increase, so your ratio, your percentage is going to decrease, because quantum increasing, so the percentage is going to decrease. And that will be applicable on gross amount of currency exchange. Just read the language. The language is saying gross currency exchanged. There may be one concept in your brain that sir, why we need to focus on these type of things? We are just handling the books of accounts, or we are filing the returns of the normal client. Sir, we should know the complete GST law, because in future if any client is coming to in our office, and at that time if we are saying that we are not dealing in these type of things, so how we can grow our practices? So that point also we need to keep in our mind. And this point, theoretical not required that you should know, but practical we should know that in case of forex department, how the value is going to be calculated. Okay. Yes, sir. In case of the value of supply, we have done the concept of value, the basic principles of section 15. Okay, if we are not able to decide the value as per the basic principles, in that case we have to take the reference of valuation rules. First rule, which is very simple, which is applicable in case of no monetary, certain monetary consideration is also there. Second rule, which is applicable in case of distinct person. Third rule, which is applicable in case of principal and agent. And if you are not able to decide according to the 27, 28, 29, in that case you have rule number 30, that is the master rule. We have also done, sir, in case of valuation, the concept in case of air travel agent, in case of insurance company, in case of banking company, forex department, in case of your second-hand goods, in case of your lottery tickets, in case of your pure agent. These are the situations in which we have to decide the value of supply, and accordingly the GST is going to be applicable. Sir, since from day one we have started the discussion on the supply, then after we have done the time of supply, the mixed supply, the composite supply, the supply of goods or supply of services, and the valuation. Sir, all these things are okay for you? Are you getting the points? You all are is in view that this session will be helpful for you and this course is going to be helpful for you. So those who are joining our session late, I request tomorrow please join sharp at 7 p.m. because tomorrow we are going to start our discussion on a very interesting topic that is called as the heart of GST. Whenever you will receive a notice in the GST, we all know very well that one para will always be there on account of input tax credit, or you can say multiple number of paras are there on account of input tax credit only. ITC. This is the very important thing which we need to keep in our mind, that is input tax credit, because nowadays maximum number of litigations are on account of this input tax credit. And the reason being, The reason being, when we want to claim the input tax credit, at that time first we have to check that the goods is used in the course or furtherance of business or not. Then after we have to check we have the invoice or debit note or not. Then after we have to check that the same is reflected in GSTR 2B or not. Then after we have to check that the goods has been received or not. Then after we have to check the counterparty has filed the return, made the payment of taxes or not. Itna hi nahi. Then after also we have to check whether the input is blocked under GST or not. We also need to check there is any reversal requirement as per rule number 42, 43 or not. So multiple restrictions, multiple hurdles, multiple filters are there while calculating the input tax credit. And as we all know, when the number of filters is going to increase, number of chances to make the mistake is also going to increase. And this is the reason for the maximum litigations on account of this input tax credit. We are going to cover this input tax credit in a very practical way. We'll discuss how we can claim the input tax credit, what are the things we need to keep in our mind, how we can check the return when our client is sending to us GSTR 3B and claiming the input tax credit, what are the specific blocked credit under GST, how the reversal is going to be calculated as per rule number 42, 43. We'll also discuss in case of new registration how the input tax credit is going to be claimed. In case any person who was earlier exempted now taxable, how the ITC is going to be claimed. Any person who has opted for the composition scheme now selecting the regular scheme, in that case what will be the concept of input tax credit. And we'll also discuss the input service distributor, how that input service distributor is going to distribute the input tax credit to various branches. All these concepts we'll discuss. And yes, most important, we'll discuss the memory techniques of all the sections related to input tax credit and relevant things. So be ready for our tomorrow session sharp at 7 p.m. Sir, if the another person is registered and that person is going to prepare the invoice, in that case, that will be treated as your intra-state supply. And if that person is just going to arrange and billing will be there, in that case, intra-state. So we have to check the scenario. Sir, definitely in case of stock insurance, you can claim the input tax credit. Sir, we'll discuss the 73, 74 we'll discuss. Nagamani sir, regarding the input tax credit, we'll discuss after completion of our thing in our next session. Sir, ITC on capital goods will definitely discuss in a very detailed way. Sir, regarding the foreign currency exchange, we have a specific circular and notification as well. Okay, that will also discuss, but that is completely linked to your concept of place of supply and the related things. So just give me some time. After 3 to 4 days, we'll discuss that concept as well. Sir, memory technique book will be shared very soon. Sir, place of supply, you just need to share. You just need to share this query on my WhatsApp. Will provide you the detail, and you just need to connect with me or call for the place of supply. Otherwise, you have to wait for 5 to 6 days. After completion of input tax credit, we'll start our discussion on place of supply, section number 10, 11, 12, 13, 14, regarding the place of supply. Okay. So thank you once again for joining the session. We'll meet tomorrow sharp at 7 p.m. Be ready. Thank you. Bye-bye. Good night.